Hey traders, what's going on? Jamie Saettele here with the FX Power Hour. Again, Jamie Saettele here with the Scandinavian Capital Markets and SB Trade Desk. And we're going to start out, usually we start with the FXCM Dow Jones Dollar Index. We're going to start with the DXY Index today. We are testing a massive level. So if I scroll out, you'll see back from the, we'll call it the COVID March 2020 high in the dollar index, we had a clean 5 waves down. Again, for those familiar with Elliott, 5 waves down, and we were looking for 3 waves up. We turned bullish back here, early in the year, and a lot of people thought we were crazy. Well, a lot of people now are very bullish the dollar, and we've made what we would call a double bottom, right? So we're getting a lot of late dollar bulls right now. My thing is I don't know, being a levels guy and being an Elliott guy, I'm looking at this as like, I've been bullish the dollar for a while, and we are into a massive level where it might be time to kind of think about going the other way, okay? Now, I need a signal first. So I've talked about this before on the webinars. We're at a level, fine. We got a pattern, a larger pattern at that, but we need a signal. So this could happen over the next couple of days. We've had a lot of volume in futures, British pound especially, as far as, getting decimated on the downside. But we are looking for volume on the upside for the dollar. And if we get that, we're at a level where it could be time to go the other way. So just to do a quick educational piece here, Elliott 1, 2, big wave 3, wave 4, wave 5, and then followed by a 3-wave correction, A, B, C. Although this doesn't really, look like much of a C wave as far as an impulse is concerned. It'd probably be more like a W, XY. However, we are at the level where we'd be looking for some downside. So we got to see what happens going into the first day of October, which is tomorrow. If I go to the US dollar index, and this is going to look a little messy. I'm going to scroll out though. This is a weekly chart here. So for one, you can see the fork that we've been following. We've hit that 50% line right up here, right? So again, this is the halfway between the upper parallel and the median line. We've hit that level. That's the level we've been looking for essentially ever since we bottomed back in February. And we're also at the 200-week average. So I don't know, my point here is that we are at a massive, massive test for the dollar. Again, a lot of late dollar bulls here, and psychology is tilted one way. So when that happens, you can get a quick move in the other direction. Here's Euro. Again, this is basically the inverse of DXY. We've got 5 waves up from the March 2020 low, 1, 2, big 3, 4, 5. This is actually a little cleaner in terms of pattern. As I'm speaking right now, we are trading 115.85, testing that lower channel level, parallel channel, right? Origin of A, end of A, B, C. Possible that we get a bottom down here. 2 legs down, by the way, from that January high is 1621. This is actually the November 4th low, which is from the election, which is what we call in Elliott the former 4th wave of 1 less degree. So we'd be looking for support down here anyway. But here's the deal. So it's not about trying to, predict what's going to happen. It's about, having a game plan for what could happen. So as we're sitting here, if we get a reversal signal right now, I'd be looking, for upside. However, if we break down, right, the market's changed, then we're looking for extensions on the downside. The extensions, as far as channels are concerned, you have the half extension, which happens to coincide with the 618 retracement of that entire rally from the March 2020 low at 112.90, right? So it would look something like this. By the way, kudos to the guys at TradingView who have put this together. They put this new little, if I can find it, this little, where is it? I'll find it somewhere. The path, there it is. All right, so you break down like this, right? Then you'd be looking for that to provide resistance. So that is polarity. So I love to talk about polarity because everyone thinks about support resistance on kind of a horizontal basis. So you have support, resistance, breaks above, comes back, former resistance provides support, vice versa, right? Because the people that, sold over here, they get out, now they're natural buyers. Well, the same thing happens on a parallel basis, so on an angle. So if we break below here, we'll be looking for resistance up here, right? So keep that in mind as we move forward. It's not about predicting, it's about understanding what is happening in the market at that time, right? The changes that have happened. So if we break down here, sellers have overwhelmed. If we come back to it, look for that level to provide resistance, not just because it's 116 because that was a former low, but because it's also a parallel, right? And you can actually see that same thing happen when I go to dollar Swedish krona. We talked about this last week, but this was support, this 25 line right here. And then it was resistance, and now we're breaking above it. So this is probably the best signal in terms of European FX, because if we break through here and come back, that's the best signal that you're going to have support for European FX, which essentially, like, I follow dollar SEK all the time, but I'll use it to trade euro. So, as we were getting down here, I think we actually talked about this last Wednesday, is we were coming down. It's like, if we are really in a dollar bullish environment, then we're going to hold on to this fork and we're going to hold within this channel and we're going to head higher, which means euro is a bear, right? Dollar bull, euro bear. All right, so let's get to the things, though, that everybody's been excited about, which is probably your British pound. So cable, aka British pound. If you don't know why it's called cable, it's because the transatlantic cable was laid out. That's why they call it cable. So here's the deal with British pound. If we end up getting a bigger bounce than we have right now, you want to be selling into 136. Again, this is a perfect example of polarity. So here's the channel, center line right here, bounced off of it. If we come back to it, it's resistance. Okay, so 136 is your level. 133.05 is 2 legs down from the high right here, from the June high. That intersects with the lower parallel. I don't know. This is an awfully bearish looking chart. So as far as a trade's concerned, you might want to be trying to scalp some off of that. But I'm not making any forecast as far as making, saying that's a big low or not. I don't know. We'll see. 133 is a big spot. The bigger level to me is probably down towards this like 128 level. But again, this is not a forecast. I'm looking for 130, 133 to maybe hold for a trade. We're bouncing actually a little bit today off of that 134 level, but 136, that's level to look for in terms of a short. All right, so here we got dollar yen. I don't know. I feel like the whole yen complex is going to explode. I'm going to bring in a little bit of a different view here. So some of the work that I did years ago was looking at range size. And if I could find this, it would be wonderful. Let's see. All right, here we go. All right, so markets go through various, we'll call them cycles of, people think of, cycles as uptrends and downtrends. We like to think of them as trendless and trending, right? So instead of having uptrends and downtrends, it's a little more complex. You have uptrends, downtrends, and sideways trends. So by measuring the distance between highs and lows, if we have a very large width and range, the market's been trending, right? If we have a very small width and range, the market has been rangeless. It's sideways. Well, we recently had a measurement, and what you're looking at here is a dollar yen daily chart. On the bottom is just it's a 50-day range. So current range is 2.64. So 50-day range right now is 2.64%. As it's going up, it means an expansion in range. We recently had a reading of 1.4%. See the red dot, 1.4%. If we go back, the only other time in the history of the dollar yen exchange rate, right, which we're going back all the way to Bretton Woods here. The only other time we've had a range that small was in July of 2014. What happened after that? We went on a 25 handle run, right? 2,500 pip run over the course of like 5 or 6 months. Point being is that you've got this kinetic energy, it's all built up, and potential energy, we'll call it, and then it becomes kinetic energy. I was talking to a buddy of mine last week, and he said, I showed him this, and he goes, well, what's the catalyst? I said, I don't know. But one of my favorite quotes ever from Paul Tudor Jones is that when a big market starts to expand its range, it's telling you that something's happening. Price is telling you all you need to know. And we've seen this happen just over the last couple of days. So dollar yen's breaking out to the upside. It's done nothing for months and months and months. The story will come out later. Maybe it's the yields. I don't know. Maybe it's a policy move from Bank of Japan. Who knows? However, I would not dismiss this. So with that said, let's take a look at some of the other yen crosses. So we go to euro yen. All right, so here's a extremely long-term chart of euro yen. If we count this from an Elliott standpoint, right? One big wave up, down 2, up 3, down 4, right? If we look at it from kind of a timing, shorter term standpoint. Here's the trend line. We're pressing that level, right? So we just turned down from it, but now we're going to look at a short-term chart and we're going to look at the fractal nature of markets. So we just showed 5 up, possibly on that longer term scale. Short term, 1, 2, 3, 4, 5 up. Let's see if we get 3 down. 618 retrace, 128.88. So look for support around 129. That's the anatomy of a setup. Okay, let's look at a different yen cross. Let's go to something like Aussie. Again, here's the thing, like I have no idea what's going to happen next. People that try to, predict and say what they know, they have no idea. No one knows. The whole idea is to identify skewed reward to risk situations. That's it. Anyone that says they know what's going to happen next is a charlatan, and they don't know. So here is Aussie yen, 1, 2, 3, 4, 5. Beautiful setup. 3 down. I would watch for support of that 618, about 79.80. And if we go to a longer term basis, you see where this massive decline that we had from earlier this year came in. Big head and shoulders bottom, right? And we came basically back to the neckline. My point being is if you were just looking at this chart, it could be a stock, a crypto, it could be anything. This doesn't look like an extremely bearish chart, right? Left shoulder, head, right shoulder, breakout, pull back to the neckline. Just keep an open mind. All right, so that's enough with the big picture yen crosses. Let's take a look at dollar CAD. So this right now is a setup that we're trading. And my thinking is that we've got a big Elliott triangle here. So back to, I guess it's July 19th, right? So wave A, down. And then if we expand wave A, we have a Fibonacci 127.2 extension to wave B. And then if we extend wave B, we look for a 618 relationship with wave E, and guess what that is? 126.14. Guess what the low is 2 days ago? 125.94. So, point being is the Fibonacci relationships are there. The pattern's there. The momentum profile is there. So we're looking for like a big burst to the upside in dollar CAD, which frankly, fundamentally, if I want to put a narrative on it, makes a lot of sense to me because everyone's talking about oil right now, and it would be due for a little bit of a pullback, which would be kind of a tailwind for dollar CAD upside. Where would I be looking for resistance on a longer term basis? Probably this parallel here, which is going to be, let's call it 131. Let's call it 131.50. Which on a weekly chart is going to be awfully close to the 200-week average. Okay. So that's where my head's at on dollar CAD. It's kind of one of my favorite setups right now. Following the yen crosses and dollar CAD, extremely close right now. So Let's move to metals. So gold's getting a little bid right now. Don't have a super strong opinion on longer term direction of gold. I guess if I were to try to make a story out of it, I would say I'd be extremely bearish, just given kind of the bullish nature of dollar yen breaking out. But again, I reserve the right to change my mind whenever the information changes. However, I'd be looking to buy gold probably around the center line of the channel. You can see what happened right here back in June and early July. We had a big bounce off that center line, right? And actually, if you remember that Sunday night when we flash crashed back on August 9th, the closing price was actually right on that level as well. So considering that we're trading right around here, I would pay close attention to the gold price. At the same time, if we break below it, good night, and we're probably heading down towards the lower parallel, which would be like, high 1500s. The big commodity to pay attention to right now is crude oil. It's all in the news, and for good reason, even technically. So you're looking at, this is a trend on log scale, by the way, as it has to be. When you're looking at prices that range, that far back in time and that wide of a price scale, but we're looking back to 08. We are testing the trend line, right? We've been testing it essentially since June. So it's kind of incredible to think that back in March of 2020, we were, there was contracts that traded negative $40, right? And here we are now back at, $74, trading the same level we were back in 2018. So yeah, keep an eye on crude up here. As a sentiment guy, kind of a contrarian guy, I'm a seller up here. However, that's a trader mentality. From a very long-term standpoint, if we break above this, it's a big deal. Again, it's not just the trend line, it's a huge horizontal level. Bill Downey says, good job, Jamie. Nice charts and channels. Fan says, hello, is Power Hour at the same time each week? Yes, usually we actually do it on Wednesdays at 10 a.m. Central Time. Changed up this week, had a little change in the scheduling. However, we will usually be doing it at 10 a.m. on Wednesdays. So keep in mind, if you have any questions you want answered in advance, then please, you can submit them on Twitter so that we have time to, kind of assemble the questions and get everything ready. Also, I'm going to go to Bitcoin right now. And this is a good time to remind everybody that Scandinavian Capital Markets has introduced 15 crypto pairs to the MT4 platform. So again, Scandinavian Capital Markets has introduced 15 pairs to the MT4 platform, and it will be coming when things are right to CTrader, right? So we want to do everything right and get everything in order. So if you want to trade Bitcoin or any other crypto pairs, come to MT4 through Scandinavian Capital Markets at scandinavianmarkets.com. And that will give me my contrarian opinion here on Bitcoin. Again, I've been holding this for a while. as far as, people forget in early February, we were sitting at $60,000 Bitcoin, right? I feel like there's still a lot of people that are really bulled up on Bitcoin, and here we are still at 44,000. Again, lower than we were in February, and people are still extremely bulled up on it. And to me, this chart doesn't look that great. Here's another example of polarity, former trend line support, been providing resistance essentially since August, turning down. We are sitting on a massive, massive level. This is another tenet of median line analysis. The center line is huge. You tend to see a lot of volatility or surprise moves around center lines, aka median lines. Perfect example is actually what happened back here in November of 2018, right? We traded around it, and then we actually crashed. So be careful around here. This is what we call gap risk too around median lines. That would not happen with Bitcoin because Bitcoin trades 24/7. However, that doesn't, dismiss the possibility of having a gigantic, wide range move. I don't know, just this chart, looking at it, to me, that night, 20,000 level, we'll call it, which is that high from December 2017, just looks like it needs to be tested. So again, that's just a kind of a thought to keep in mind. Gary says, interesting how many different markets are at big levels. Suggests a lot will happen in the final quarter. Yeah, I agree. The dollar is at a huge level. That 90, let's call it 94.50 to 95.70 is absolutely massive. It's tough to kind of, we haven't even looked at indices yet today, but, indices are, obviously at big levels as we go into October 1st. Here's the Nasdaq, just real quick. Looking at the Nasdaq, back to the September channel and the trend line from November, and the 38.2 retrace from the May low is, 14.6, 41.50. It's a big spot, right? I mean, the biggest level that we could look at, I think right now, as far as everyone's talking about, would probably be, let's see, everyone always talks about the 10-year yield, but the 30-year yield is actually the one that I follow the closest. There's reasons for that. One, it's most removed from the, at least historically, from government intervention control, right? The 30-year yield is the most indicative of inflationary pressures, whereas the short end of the curve would be more indicative of what the government can do. And the reason for that, of course, is, what are you going to lend the government for 30 years, right? If you believe 30 years out that, they're going to pay you back, that's where the inflation comes from. So we've hit off a huge level. This is the 30-year yield at 208.5 right now. I don't know. This could be a very scary looking chart, right? If you look back here, left shoulder, head, right shoulder. Again, 30-year yield, you're talking about an absolute rip to the upside. Just kind of imagining things happening. Hit off a huge level. So I don't know if you're out there and, watching this, for not just trading purposes, but, kind of economic purposes, that I call it 3.1% 30-year yield is a gigantic spot to keep in mind. So yeah, Gary, that's a good point. There are a lot of markets at huge levels right now. And it kind of freaks me out that FX has been so docile and been so quiet for the last couple of quarters because, after you get that real quiet period, you could have a real explosion in volatility. So I don't know. It's the biggest market out there, right? So we could have some big moves. And maybe the last week after the last FOMC announcement. We're starting to get, some dollar strength. And I don't know, I'm not going to predict which way it is, but at least the volatility hopefully is here to stay for a little bit, but we'll see. All righty, so that's about all I've got for today. U.S. market just opened, as I'm still wearing these headphones, and it just blasted my ear, so I'm kind of deaf right now. But that's it for me, and everyone have a good rest of your week and a safe weekend. I'll talk to you next week. All right, take care.